Welcome, dear traders. You are watching a recap of the Asian session on June 15. Asian stock markets kicked off the Thursday with the gains, and Japanese equities have been growing for a fifth consecutive session. In Australia, stocks have been rising since Monday, and in New Zealand from Tuesday, June 13. Asian stock indexes advanced amid bullish sentiment on Wall Street. Investors have been waiting for a pause in the Fed's aggressive tightening for a long time. As widely expected, after 10 consecutive rate increases, the Fed took a pause, keeping the key rate unchanged at 5.25%. However, forecasts for 2023 and 2025 and Jerome Powell's comments turned out to be rather hawkish. For example, this year the interest rate may be raised to 5.6% if the economy does not slow down and consumer prices remain at high levels. In March, the Fed expected the benchmark rate to total 5.1% by the end of 2023, as the central bank did not abandon its hawkish stance and even hinted at 2 more rate hikes by 25 basis points in the remaining 6 months. The US dollar index managed to climb. In the morning, it was trading around the intraday high of 103.30. After facing bearish pressure in recent sessions, the greenback plummeted to a monthly low versus its main rivals. It usually rises amid hawkish comments and forecasts. Yesterday, it rebounded from 102.70 following Powell's speech. In the Asian session, it was moving in the upward range of 102.90 and 103.40. US Treasury note yields are also recovering after yesterday's pullback. Nevertheless, investors priced in the Fed's pause in June and a new rate increases a long time ago. This is why the greenback is likely to start a downward correction in the near future. While the Fed sticks to aggressive tightening, the People's Bank of China, on the contrary, eases monetary policy. Today, it lowered the rate on a one-year medium-term lending facility loans. The government is trying to stir up the economy, crippled by prolonged restrictions. Besides, fresh reports were rather disappointing. On a Thursday, risk sentiment worsened after the release of retail sales data. The indicator fell to 12.7% in May, after a sharp increase of 18.4% in May. Such a decline looks really discouraging. Besides, this was the first drop in a reading this year. As a result, the yuan sank to a 6-month low against the US dollar in the Asian session. However, the Japanese currency was affected by a rise in the US dollar. Bank of Japan policymakers have stated many times that they need a weaker yen until inflation runs steadily at the 2% target. As the Bank of Japan is expected to keep the rate unchanged at its meeting, the outlook for the dollar-yen pair remains bullish. In the morning, the dollar-yen pair was moving in the range of 139.90 and 141.5. At the end of the Asian session, the yen broke through the key level of 141 for the first time since November 2022. After that, it climbed to 141.40. Pessimistic data from China and the fall in the yuan did not stop the Australian dollar from rising. However, due to weak economic reports of its main trading partner, the Australian currency was very volatile. Yet, improved risk appetite in its stock markets and rising oil prices bolstered the Aussie's further growth. The USD pair was moving in the upward price corridor of 0.6765 and 0.6829. At the end of the session, it grew to 0.6820. Given that China's central bank will provide more stimulus to boost the economy, market sentiment is likely to recover. Inflation in Australia is projected to climb to 5.2% in June. It means that the Reserve Bank of Australia is likely to keep raising the key rate. Therefore, the Aussie may maintain its upward movement against the US dollar in the long term. The New Zealand dollar has already experienced several sharp rises and drops over the past 12 hours. However, the Kiwi dollar pair was mainly trading in the downward range. In the Asian session, it slid to a 3-week low of 0.6170. The US dollar is strong amid expectations of new rate hikes, and the Kiwi was no drivers. Fresh macro stats were downbeat. The Reserve Bank of New Zealand also decided to end the tightening cycle, and it's extremely bearish for the Kiwi. After GDP shrank for the second time in a row, the risk of a recession in New Zealand seems more real. The Kiwi did not move far from its 3-week high, but ended the session in the bearish channel of 0.6076 and 0.6220. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. And see you soon.